Hey guys, hope you are all having a great day. What need I say about today's trading session that you haven't already been raving about? Stocks weren't just green today, they were neon green. They were up and running, with GameStop passing over 30% in gains at one point. A huge rally considering the stock dipped around $75 on its quarterly earnings date a week ago. On no news, GameStop and AMC both had among the best performances they have had in a long while, with the rest of the market also enjoying very bullish actions. You would have expected big headlines such as an end to the war in Ukraine, or that inflation numbers were wrong and are actually under 5%, or that supply chain issues are no longer going to be affected by the effects of the pandemic. But no, the events that transgressed today have no real explanation. You can go to financial news websites and you will see all of them have different explanations as to what is happening, for this market rally is not based on fundamental data, which is why I am even more skeptical than ever about it. This Sunday, we talked about what I thought was going to happen this week. Eluding and sourcing my beliefs and expectations based on historical data lining up with current data, I said that markets would rally, with big money intending to force all those short positions to get forced to cover after a massive set of margin calls were issued. This massive run could be the big money pumping things up. My take is very different from the explanations of other experts, which we will talk about in a minute, but still, my point stands. I am not confident in this rally, particularly given that the Fed said during their committee last week that they expect both higher inflation, worse economic output and further decrease in economic growth. The markets, under any real metric, are by no means oversold. To compound matters even more, Jerome Powell literally said yesterday that higher rate hikes are definitely on the table, with half a percentage point to a full percentage point right on the table. In an economy that is debt-based, where money is printed when needed instead of having a standard like the gold, this isn't good news. In fact, last time the Fed tried to do what it is suggesting it will do, markets began crashing so quick the Fed had to do a 180 and reverse action. Still, we don't know what the future awaits for us, and I am just stating and pointing to the big elephant in the room. I do not want to take away from this rally, as day traders such as myself definitely benefited from this massive run-up. Interestingly enough, we are going to talk about Evergrande, for big things have been taking place in China. While all eyes were concentrated on the Ukraine crisis and on uncontrollable inflation, things in China have been quietly developing, and they are due much attention. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Do you know what the most obvious and consistently right sign that things are going bad is? It's when China says things are right on track and running smoothly. Without a miss, this single action proves correct when making bets against a certain market. China Evergrande has been assuring investors that it is on track to provide their creditors with a preliminary restructuring proposal by the end of July, and has been trying to urge patience to investors after missing deadlines. They said they are working to raise funds after it recently disclosed that banks had taken full control of more than $2 billion held by one of their key subsidiaries. They announced that they won't be able to meet their March deadline for publishing audited results for 2021. There's now clear evidence that the Chinese government has also been trying to take a lead role in guiding Evergrande through their restricting of debt and business operations. Yesterday, Evergrande, along with other companies, were suspended from trading in the Hong Kong market in the morning. Their shares were halted without any real reason. This happened immediately after they announced that they were going to restructure their proposal in the next 6 months. And this is where things get really bad. I have been doing a lot of research into Chinese real estate, and there are a lot of warning signs popping off right now. China's property developers are now saying that they cannot release earnings on time, a very worrisome statement considering it isn't just one company, but a huge bulk. These developers, which include Evergrande among them, gave multiple reasons as to why they cannot release their earnings on time. In some of their filings to the Hong Kong Exchange, they said that due to drastic changes in the operational environment during the second half of last year, they need to make large numbers of additional procedures to audit information. They also cited the new recent outbreak of the new pandemic variant. They claimed that they will be releasing results as soon as it is practicable, which is even more worrisome and weird. It is a fancy word of saying whenever they want. 9 property developers have yet to announce the dates of their board meetings too, and the likelihood of more developers not being able to release results on time is rising. Analysts are now expecting weak results in general, with squeezed margins, declined profits and reduced dividend payouts. And further look into this matter uncovered even another bigger warning sign, one screaming put your money in the mattress. While looking for all Evergrande information, there seems to be enough evidence suggesting that even with all the debt and bad performance property developers have, it isn't even close to coming to the real hidden debt they are apparently keeping away from the public. Evergrande got $2 billion seized by the banks, but it now apparent that this is linked to the parent company. This means that investors are trying to force themselves to get every little penny that Evergrande has left, leaving offshore bondholders with nothing, and due to investors being kept in the dark, it is very likely that Evergrande could not have much more to give left. Evergrande Property Services, which generates income from managing apartment complexes, was thought to be one of the more stable sectors of the company, but this turned out to be wrong. The cash that was seized by the banks apparently makes up all the cash in the books of Evergrande, which means there is literally nothing else. My findings on other companies are limited, but developers like Kaisa have also been experiencing similar problems, leading me to believe that the hidden debt problem in the Chinese property developer sector is much bigger than imagined in a full global crisis, as this will definitely spill over to the global economy if things shake out of control. I will continue monitoring the situation, as there is so much more to uncover here, but things in China are not right, and Evergrande could seriously prove to be the snowdrop, albeit a big snowdrop, that sets the avalanche. So let's now talk about meme stocks a bit. After all, that is the main focus of this channel. Remember how we talked about AMC raising prices for the movie The Batman in the last Spider-Man iteration? Well, the elevated ticketing seems to be working just fine, as audiences did not deter from going to the movies. This means that AMC, and other theater chains, greatly capitalized on recent movies and will for sure be implementing higher prices for other big blockbuster movies for the remainder of the year. AMC will continue to make higher profits and bring in more revenue. The rally today did not come as a result of this. In fact, there is no real explanation as to why markets ran the way they did today. GameStop and AMC's surge is now being explained by big-brained experts on finance media as investors doing another rally, which is ridiculous considering we never left and have been buying the stock as we always have. If running over 25% on a common day with no catalysts like today is the norm, then we should by now be in the six-figure price for each share. Given that this is not the case, the reasoning by the bought-out corporate shills stands incorrect. GameStop and AMC surged along because shorters let it run the way it did. Do not attribute this run as a testament to the willful purse power of investors. We do not control the daily movement, and no technical analysis of the stocks explains this run. This is just simply market makers, big money and banks all working along to let things get green. The reason for this is what varies. I think it's because they are hoping to screw all those shorters who will get margin called, causing a squeeze on stocks to further the rally before a big pullback. Others attribute it as investors all of a sudden being happy that the Fed is being more forceful to fight inflation. Others say it's because stocks are just oversold and we are just normalizing and pricing in inflation and the uncertainty of war. Only time will tell, but do enjoy watching those accounts turn green though. Do not let cynicism take away from the joy of making money. Let's now talk about today. The Fed submitted over $1.763 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 55% of the total volume today, while dark pool trades for GameStop accounted for 58% of the total volume today. AMC had a larger amount of buy orders than sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC had a bullish day, gaining over 15%. Listen, there is nothing to say about today's performance other than from the moment markets opened, AMC was allowed to run up with little retracements. The stock opened at around 15.95 and closed at 18.26, above the VWAP. Support will be met at 17.44, 17 and 16.62. Resistance will be met at 19, 19.50 and 20. GameStop had a bullish day, gaining over 30% for the day. This monster stock behaved as if shorters didn't exist. It opened at around 94 and went straight up, closing at 123.14, above the VWAP. Support will be found at 117, 114 and 110. Resistance will be met at 129, 132 and 135. Both these stocks traded up with little intervention by shorters, which is unheard of and the biggest evidence to me personally that this movement is nothing but a lie. Let's see how we continue to trade in the upcoming days and weeks. And that is all I have for you guys today. Thank you all so very much for making it to the end of the video. Let me know your thoughts down in the comments below. And most importantly, remember to come join my Discord. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.